Welcome back. It is the one HODLs. It is Tuesday. I'm chilling today, stepping away from the desk to chat it up with you guys, to share some insight that I think you should really know about. If you're stacking sats, do it responsibly. That means stacking the smallest unit of Bitcoin. If you don't know, do it responsibly and go through a peer-to-peer decentralized exchange. Avoid KYC. All you need to do is sign up, use a password, and trade with anonymous people. Bitcoin. Link down in the description for hodl.com. Also, store that Bitcoin in a hard wallet for cold storage, right? The safest means of storing Bitcoin is to store it in your personal hard wallet. And this hard wallet is also open sourced and very popular amongst the Bitcoin community. It is a Bitcoin only wallet, the cold wallet. Link down in the description to the CoinKite store to get that cold wallet. Let's get into it. Today's Tuesday, and some things I was thinking about when it comes to the crypto people. I'm understanding more the mindset of the crypto people, or crypto bros, or the people who undermine the true value and the scarcity of Bitcoin, and for the sake of focusing on potential fiat gains, or these what we've seen in the past cycles, 20x's and 15x's and things like that when it comes to these altcoins. I think a lot of people understand that this time is different. A lot of people who are thinking people understand that this cycle has a lot more variables that past cycles haven't. I think one thing that shouldn't be ignored, that I think crypto bros are, is the current financial environment, the current economic environment globally. I think they're not looking at the fact that high interest rates has been driving a lot of capital to look for safety, look for something that is sound and secure, which clearly crypto in name hasn't been able to show or prove to the world, based on a lot of the events that we've seen in the past 24 months when it comes to the Three Arrows, the Lunas, the Celsius, the various exchanges and various DeFi protocols that have been advertising that they'll give investors a return on their money, and then these investors have been completely wiped out due to the cross collateralization of these different DeFi tokens and these protocols. And I personally think it was a culling of the idiots, the people who jumped into crypto for fiat gains rather than for understanding what it is exactly that they should be going for, which, shout out to British HODL for really being eloquent with bringing this to life, is you're looking for a valuable asset. You're looking for the most valuable asset. And by default, assets are going to appreciate if they're valuable, if they're scarce. And so people are not looking for that. They're looking for the speculation. They're looking for what's going to give me return on my dollars, what's going to give me 3% a day, what's going to give me 3% a month, and not even caring how yield is even really generated. Yield in the TradFi world is typically generated through taking funds, putting them into an account, and what that account is doing is having a business to utilize those funds in order to produce a product which they sell, and then they earn a profit after they pay all their expenses and costs. And that profit, they take a margin of that profit and give it to you, the person who was the initial capital or liquidity provider to that business. And majority, if not all, of these altcoins are essentially not doing that model, right? It's just more so just a community puts all their money into a liquidity pool, a token is created to match it, then new capital has to come in to purchase those tokens, and whoever has the most tokens has the most right or most claim to everybody's money that's been put in that liquidity pool. So that's not at all capital growth, or that's not at all revenue. Okay, that's a Ponzi. And so this took me some time to learn that and finally reach that point and to understand the true value. And understanding that, in my opinion, helped me understand the true value of Bitcoin as a scarce hard asset that has to be, if people are not hacking and stealing it, it has to be just straight up acquired through money, through work. Unless you're very close to the money printing machine or to the higher ups in the world that are they're trying to control the world, that are able to take a stack of money and buy their Bitcoin up, which we're seeing is happening with BlackRock. It's just an indicator showing that that's what's happening at this point. So that's why I think that a lot of crypto people are not recognizing the environment now, is that that the crypto world has a blemish on it, and that also that the retail world, the everyday guy and gal, is not in a position anymore due to this new economic world to really spend that excess capital for hard, scarce assets. I think there's still a chance because of now, prices are depressed. What I'm showing, even at this $26,000 level, we're near a bottom of a uptrend or up channel. And we may see 22,000 to 20,000 one more time to back test the bottom of that channel, but we're near the bottom of a channel. So if you know what an uptrend looks like, we're talking about this up, right? Peaks and troughs. So we're near a trough. We're at the trough, and troughs is where you should buy if you want to ride up to the peak. But I'm come to find out a lot of people still don't understand money, still don't understand what savings is, and still don't understand what a hard asset is. So this will be another missed opportunity for many, in my opinion. Also, what the crypto bros don't understand is that just because centralized exchanges are allowed for citizens in other countries around the world, and the U.S. is being very hawkish or bellicose, they're on a war path to really regulate the space and to get these crypto exchanges that are running, I would say illegally, because of the fact that they're not disclosing, they're not bringing clarity to what they're doing, and they're not bringing proper disclosures to people. That they think that it's okay because they're still going to get liquidity, they're still going to get a rush of capital into their little small cap, medium cap altcoins through other countries. I would say this, it's possible, but you're going to get that capital is going to come in a weaker currency than what you're looking to cash out for. You're looking to cash out for the dollar, which in my opinion, I see it being still going to be a dominant currency for years, maybe years to come, relative to the other currencies in the world. And so if you're looking for some people in China, Korea, the rupee, India, the rupees, even in countries in Africa, to influx capital into an exchange, into a small, tiny exchange, in order to pump your crypto bag, because the U.S. is forcing you to KYC, or they're not allowing, or they're calling your crypto a security, and therefore the U.S. exchanges have to drop it. You're relying on these other countries with weaker currencies, with less GDP, with less wealth, to try to move your coin, while Bitcoin is a green light in the most financially wealthy country, which would only be the light post for other Western powerhouses to follow suit. And so you're talking about major capital in the strongest currency coming into Bitcoin. If you hold on to your bag too long, your altcoin, you will not be able to afford Bitcoin. You will lose, your altcoin will lose value in Bitcoin terms dramatically. And so this is another thing crypto bros are not thinking about. They think because they're too focused on the fiat gains. Anyway, drinking a little bit of some hot water. and just wanted to chime in with you guys. We had 10 minutes. I'm way past what I usually do, but I like this setting. May start doing these regularly, but also still do the car rides when I feel like it. I'll get at you guys later. Till next time.